Alrighty, guys, welcome to tonight's charting session. It is Tuesday, October 24th. Hopefully, everybody is doing well. Today was a great day here in Tactical Traders. I took 2 trades on live, and then I took a third trade in the chat later on the PM. So I went 3 for 3 today. We'll talk about those trades that we ended up taking. My bias throughout the day. I didn't really check anything in the PM session, so we can review that as well, and I'll see if there's maybe anything there. And then we'll talk about what we're looking at going into tomorrow, and then what we're talking about, anything that you guys want to show, any trades that you guys took that you want me to review, any questions you guys have along the way. But kind of the goal for tonight is to go over those trades, kind of my bias, why I took them. And one thing I want to talk about tonight is I covered it in the recap. If any of you guys watched the recap video today that I made, I talked a little bit about this, but tonight I want to go over more in depth on my understanding of why I place my price targets where I do. Because a lot of the times you guys get confused of what an internal versus an external model is, and sometimes when I take a trade, I target internal draws, and it depends on the specific setup, and I want to cover that today and kind of talk about and make you guys kind of understand that if you don't already do. So going into the day, let me kind of go back to the morning here. So going into the day, I had a bullish bias. My bullish bias is I want the draw on liquidity to be this high. Again, zooming out on a daily, I'm kind of letting this kind of give me where I want to go. We actually opened up in an inside bar, but I really wanted to see kind of this is what I was looking for. So I was looking for an expansion move up into this daily fair value gap. So I was pretty bullish going into the day. We had relative equal highs up here, and this is kind of what I was looking for. And also we had this internal high right here, which I wanted the draw on liquidity to be. So zooming into the morning, I was looking to see, again, this was actually a Cameron model. So if you guys don't know, Cameron is ICT's son. He has like a model that he's kind of made where it's a draw on liquidity, which is you either have, buy side or sell side. You wait for a stop raid or, internal sell side being swept, whatever it is. And then you take a fair value gap targeting whatever the draw is, right? And a lot of time, it's a really good setup. It's a really easy setup. So that's kind of the first trade I actually ended up taking today. I didn't really realize that's kind of a Cameron's model, but going into the morning here, we had these equal lows that NQ ended up taking out, and I was expecting us to hold this area. We were retracing back into this fair value gap that we had on a bigger time frame. We had a 5-minute fair value gap there as well. And we actually ended up forming an SMT here. So on ES, at this specific time, if we look over at ES, we were not taking out this low. So NQ was making a lower low, and ES was making a higher low. So we had a bullish SMT. After we started to form this, I noticed we had this SMT, and I was wanting to expect that NQ, these equal lows were just going to be a sweep, and I was looking to see displacement up to see if I could catch a long to target this internal high here, right? So again, I'm not looking to target. Now, I did look to target this high because this is what I want the external draw to be, but I'm less confident, again, from this specific model, right? From this specific model. If I'm just looking to see displacement up here, I'm confident that this becomes the draw, right, in this previous high because it's the internal model. I'm not as confident that we're going to go straight up to this high. We absolutely could go straight up to this high because that's the external draw, but I'm super confident that the overall model I'm trading allows us to go to this buy stop, right, because we're sweeping at this internal low here, right? So it's actually this previous high, but since this high is so close, I'm expecting this to become low resistance liquidity run. So that's what I want to touch on, okay? So zooming into lower time frames, going into the 15 second, actually going into the morning here. Again, I was trading it on a lower time frame because of the internal model. We got a big move to the upside. Again, not really looking to touch anything. Still kind of waiting here. We end up coming down. This is when we formed that SMT with ES. I noticed that we're kind of still holding this. We ended up sweeping this internal low in the morning. And then at this point in time, again, I'm still waiting to see if we get a long setup. But right now, I'm still waiting. And the kind of what is going to give me the bias here is if we can run all of these imbalances. If we just had this big move in the morning and then we just sold right back off, this could possibly be a short, right? If this fair value gap holds, this bearish fair value gap, I would expect us to probably continue lower. So again, I'm waiting to see what's being respected, what's being disrespected. Once we continue up, and I recognize that this imbalance just got fully ran through and we just have to pump up, I know that we're ready. We're most likely going to shoot to that draw on liquidity, and that's what I need to see for structure-wise. So after that, I wait for a pullback into this inverse fair value gap. Again, I'm expecting now that this has been ran through, I'm expecting this to become an inverse and this to hold. We come back down. I get tapped in. We bounce up this 15-minute fair value gap, and then we're patient, and then we finally get that nice move up to buy side here. And then I took off, I think I was in 5 contracts here, and then I took off 4 at this high. I trailed my runner. My runner, I think, got stopped out at like right here. I let my runner go here, and then we ended up coming back down, and then I got stopped in profit on my runner here, because I knew that if we were going to come down here and not respect these imbalances, then if I put my stop to break even, again, we're going to get the displacement down anyway if I wasn't to stop out here. So I decided to stop it out in profit because I knew that if we were going to go to that stop anyway, we were going to go to this stop most likely. So stopped out in profit on my last contract. Good start to stay. And then after this, we get an immediate second model here. And this is the first, and one thing I want you guys to notice too is that the two trades that I took in this trade right here that I'm about to show you guys, and the trade that I took later in the day in the PM are the exact same model. The exact same model, just on different time frames, and we'll talk about that. So again, what am I confident here with? If I'm looking to take a trade, right? This is exactly what I want to see for a high quality setup, by the way. Buy side swept. Again, the only really thing that's not high quality about this setup is that two different draw. That it's go again. I guess you could say it goes against the external draw because I want us to go to this daily high, but it's still a high quality setup because that's what just the internal model showed me. And you got to keep in mind as well, it's okay for me to play counter trend if I'm trading on a lower time frame. Again, this is on a 15-second, right? So I'm trading the internal model again. This is showing you guys that this stuff happens. This is how the market moves. The market is fractal. The market moves no matter if you're looking at a 1 hour, a daily, a fucking 5 minute, or a 1 minute, or a fucking 15-second. You will see the exact same things happen, right? So that's what's great about trading ICT is you can find these setups on almost any time frame if you know what you're looking for. So setup for this is, again, we had buy side swept. That internal high is now taken. Again, at this point in time, I'm bullish, or not at this point in time, but before this, I'm bullish because I want to see this get ran through to the upside. So once I see that we get displacement back down, that is when the market tells me, all right, we're flipping. IPD, or the algorithm is starting to flip, and we're most likely going to go hunt sell stops here, right? So this is now our internal model for sell side. Again, the way that I think about this for my price target is I'm not confident that we're going to London low yet. I'm not confident we're going to this low. I'm not confident that we're going to this low. I am very confident, though, that we will go to this low. Why is that? Because this is what the overall model is showing. Right? We come up buy side swept, internal swept. We get displacement down. This is the first low in sell side where this internal model starts to play out, right? So I'm taking most of my contracts off here, right? That's what I'm looking to see. So we come up. I tap this 15-second fair value gap. We end up getting a really nice entry. And then we end up forming turtle soup entry, which is right here on ES. We end up forming an SMT. ES has a nice pump up, forms a higher high. NQ forms a lower high. If you go back in the recording that I posted today, you'll see me say, Right when we got this SMT, I said, all right, this is turtle soup. We should dump now. And then, of course, that's exactly what happened afterwards. Again, of course, took 90% of my contracts off here just in case we do get a continuation lower. And then the rest got stopped on break even on this one as well. And then had to move back up. And again, notice, we come down to sweep these stops here just to go higher. Why is that? Because when I'm playing counter trend, like this specific trade, right? Because this technically goes against my external draw, which is I want to see these equal highs taken and this daily fair value gap taken. I'm not aiming to see a big sell-off because why would we get a big sell-off when there's no reason for me? I have no conviction that I'm going to get this kind of move, right? Because my draw on liquidity is higher. So why would I see a massive sell-off like this? And I see a lot of you guys trying to catch those types of trades when you can't recognize the internal model versus the external model. And that's why I always say the best trades that you'll take and the best setups you'll take is when you have a trade that is in favor of both the internal and the external draw. Right? That is when you'll see your runners really get to go, and you'll really capitalize on those runners is when you have it in favor of the draw. And sometimes you won't, right? Like this trade. Sometimes it'll come up and sweep this and then come back down. But the times where you do take a trade and you do let your runners go, a lot of the times if it's in favor of the draw, you're gonna get a hefty return on that, right? And that's the best way to trade it. But you have to recognize when you're playing against the external draw or you're playing the internal draw, and when to hold or when to let more contracts go or when to take it off, early. And this, I don't think this is taken off early. This is exactly what I wanted to see with this specific model, right? Because I'm confident this low is getting taken. And another thing I want you guys to think about it as well is think about it as, retail stops, right? Liquidity is basically resting orders that market makers, or algorithm push to, gather liquidity to then move the market, right? So when we end up coming up and we sweep buy stops, all of the people that were in short, all of these buy stops are now taken. So markets then pump to the downside. All of the people that were now chasing longs, right? All of the people that were expecting to see a breakout here, where do you think they're putting their stops? All of the people that ended up going long today in the morning, where do you think they're putting their stops? They're putting their stops at low of day. right? Anybody that's accumulating here, accumulating longs, expecting to see a bigger move, all of their stops are at low of day. So when we get displacement to the downside, that gives me confidence, this move here, that gives me confidence that we're going to go stop out those traders just to move back higher. And that's exactly what happened. We come down. So now all of the traders that were in long in the morning are like, oh, I was wrong. I was so wrong. I should have shorted instead of longing, just for the market to come down, stop out all of those people that were in long, just for it to then reverse right back to the upside, right? And that's the kind of goal of what I want you guys to think about, is understanding liquidity, understanding how the algorithm works, understanding of how the market is going to fuck over other traders, how you can take advantage of that, right? Take advantage of how the market is going to fuck over other people that don't know what they're doing. And that's exactly kind of what these models are. It's just based off of understanding of drawing liquidity and understanding why markets move. So after this, we end up coming back up. Peep, again, little internal standard deviation here, little manipulation move that we had right here. After sweeping this internal level, we took that low one more time. We ended up rejecting perfectly again off of that 2 to 2.5 area, selling back off right here. Notice nice respect, comes all the way back down. Then at this point in time, again, I'm not really looking to touch the market. At this point in time, I stepped away, so I wasn't really watching the market. And then I came back to the market around, we end up pumping up. We end up taking that buy stop level. Still waiting. So I end up coming back to the market around, still waiting. All right, right here. So zooming back out, I come back to the market. I'm like, okay, all right, we're starting to kind of figure it out. And a lot of the times, you guys know me, a lot of the times when I take two trades, I really won't trade the rest of the day. Like, again, I don't need to. That's why I hopped off early in the morning session after we took those two trades, because I really don't. I went downtown, I got a haircut, and then I came back, and we were end up forming this model. But it looked so good that I couldn't have not taken it, because it was just so free. So this trade that we ended up taking, everything I needed to see. Again, notice this is the exact same setup. The exact same setup from the setup that I took earlier in the morning. The exact same thing, just on a different time frame. This is now instead of a 5-minute high being swept, this is now a 15-minute high being swept with displacement back down. And instead of a 15-second fair value gap that I'm trading a 5-minute fair value gap, right? The exact same model here. So again, notice I'm not taking any trades up here. I'm not predicting that we're going to sell back off, because I don't know that we're just going to consolidate here to maybe sweep an internal low and then go back to that external draw, right? I have no idea that that's going to happen. There's no reason for me to be taking a trade up here when we haven't gotten this move yet, right? Again, displacement equals fair value gap. A fair value gap will get created when we have a displacement, right? That's what an inefficiency is the market moves quick where there's inefficiencies left in the market, which is unfilled orders to rebalance to, right? So we formed this 5-minute fair value gap. I'm now waiting for price to retrace back into this. Look for a internal rejection. Again, this is when I zoom in, and I got a question earlier, and the question was, I see that sometimes you take entries just off of a fair value gap, like it'll tap in and then you take an entry, or sometimes you'll wait for the rejection of a fair value gap to take an entry. And the reason why sometimes I do that and sometimes I don't, it depends on what the time frame is, right? For this specific time frame, like a 5-minute, you could absolutely just short when we come into this imbalance. But if I'm doing that, my stop's probably going to be like somewhere up here, which means I'm risking more. But if I zoom in to the 1-minute, and then I wait for the internal rejection. Again, I'm now thinking of this exactly of what I would any sort of trade. If I now imagine this as a 15-minute time frame, how would I trade this? If I'm imagining this chart right now as a 15-minute chart, how would I trade this? Well, I have a bigger time frame imbalance. Maybe this is now a 4-hour. I'm looking to see us come into this and sweep this buy side level, and then I'm looking to see a rejection, right? So that's exactly what I do. Is I come up, again, still no trade, because I don't know if we're going to run this imbalance or not, right? I'm confident that we're probably not. But to even be more confident and to have better risk, I wait. Right when this candle comes in, boom, I'm in short. I enter short, and I move my stop to this high. So now my risk is phenomenal. I get really, really good risk reward here instead of just waiting for the entry here and putting my stop way up here. Again, that's not bad. You can absolutely do that. But just the way that I trade, I like to be as precise as possible. So I use the idea of fractal trading to my advantage, right? is I have a model, I'll zoom in, trade that exact same model again, I'll zoom in again to again trade that exact same model, and that specific entry inside of an entry will give me the highest probability setups, right? And that's pretty much how you get the best setups. So right when we reject, I enter short, we end up selling off, and then I ended up adding to this position somewhere around here. When we start to have this move downward, I add to my position. I add a couple more contracts because I'm pretty confident that we're going to sell off. Now, the only thing I did wrong today, is, and I do want to admit this because I do want to reflect on this, is I do think that I took too many contracts off too early. I took too many contracts off too early. And the reason I did is because I don't know. I wouldn't say I was scared, but when I saw ES take this low, that's when I took most of my contracts off. So ES, I was watching this 1 minute. ES, again, another really great short model. You could have taken the exact same short on ES if you wanted to. But right when I saw ES come down and take this short, I took off most of my contracts, which was right here. So right when ES or NQ took off or took this initial low here, I took most off right here, and I let my runner go. Now, looking back, this was not a bad decision. Again, it was actually kind of a smart decision because if ES came down and swept this and then we formed SMT and then bounced, I would have been upset at myself for ignoring the fact that we had an SMT at the time. And then I would have, given up profits, right? Because at the time, NQ, we're nowhere near taking this low. Now, we could have absolutely formed SMT here and then bounced. But I wish, again, I guess it's hindsight. Again, you got to recognize building good habits versus bad habits. And in this specific case, when I took these contracts off, it was in a good habit, right? Because I recognized that there was an SMT. There was a chance we could bounce. But it kind of maybe was overanalyzing. Again, I don't really care. A lot of the times I would just recognize that I'm not upset with what I did, right? Because I still made a lot of money and I still took advantage of the move. Could I have made more money? Absolutely. But I'm not going to think of it like that because that's only just going to build bad habits for myself. So looking back, the only thing I really would change here is just take off less contracts. Still, I should have confidence in the model, should have confidence in the draw and liquidity. Just take off less, right? Still take partials, just take off less contracts and take advantage of where I know and I have conviction with where the market's going, which is this external low. I could have capitalized on that more. And that's pretty much the only really thing that I would change about today. So those were the 3 trades that I took today. One thing I want you to realize, look at this 5-minute chart. What does this look like, right? Picture this in your head, this structure, right? Picture. Now let me go to the last trade I took. Look familiar? Wow. It's the exact same fucking thing. Exact same fucking thing. Fractal price. I want that to get in your head. All right. So, any questions on those trades first? Any questions on any of those trades? Turtle Soup. Turtle Soup is just SMT in favor of whatever the draw is, in my opinion. It's just Turtle Soup is just an SMT that creates a fair value gap after a move to whatever the draw is. All right, let me clear the chart up a bit and let's talk about what we're going to be looking at going into tomorrow here. Oh yeah, let me take a look at the PM actually. I didn't really check the PM yet. So my idea of the PM is the only really thing I would be waiting for is I would just be waiting for this fair value gap to get ran through. Once this gets ran through, I'm confident that we're probably going to go back to new highs. And the only reason I would say wait for this to get ran through to take any sort of long is because we could absolutely hold this and then flip to this level here. And that's kind of what I was actually leaning. I was kind of upset that we didn't come down here because I wanted us to, because this was where our 4-hour fair value gap lies. So I really wanted us to come into this 4-hour fair value gap and then bounce. That's kind of what I was looking for, but we didn't. So that's really the only reason. If I was looking to take any sort of trade, I would need to see this fair value gap get ran through to the upside first before really me taking anything. And I wouldn't have taken any shorts here either because we never got the displacement out of the range. So I guess really you could have taken a possible long setup. Again, we kind of chopped here a lot actually. So we know the 1 minute. Yeah, I really wouldn't have taken longs. If you did take longs, probably it was a scalp and that would have been nice, but again, not really my cup of tea. After the morning action, I don't really look to capitalize on this, and I don't really like that kind of action. So I don't really need to. Yeah, it looks all right. I wouldn't really have taken anything in the PM, I don't think. All right. So going into tomorrow, let's kind of talk about what we're looking at. So this daily fair value gap has now been taken. Equal highs has now been taken. We're in a daily fair value gap. We're starting to reject on it. At this point in time is when we tend to be a little bit more patient. And I want you guys to be a little bit more patient going into tomorrow and wait for a decision. Now, the reason I say that is because I am bullish. I am bullish. The reason why, we've swept these equal lows. We're bounced off a weekly imbalance down here. We're starting to get displacement up. But you have to keep in mind, we are rejecting a daily bearish fair value gap, and we are now back inside of this range that we've now taken. So what am I looking for going into tomorrow? I'm looking for us to pick a fucking side, which is I'm looking for us to come back down into this 5-minute or this 4-hour fair value gap. So zooming back into the 1 hour, we've now rejected this 1 hour fair value gap, or the daily fair value gap. We've swept this internal buy, or this buy side level with the equal highs. I want to see this 1 hour fair value gap get ran through to the downside, and I want to see us come into this 4-hour fair value gap. I think from here, if we can come down here, sweep these equal lows, and bounce off this fair value gap, I think we'll skyrocket. I think that's when we'll start to have a trend shift. That's what I'm looking to see. But for now, I'm not confident that we're already going to run this, especially with this kind of candle that just came in. We just came up, tapped that, and then just rejected. So I'm kind of going to be waiting to see what happens in the overnight session. But I am going to continue to be bullish on an external time frame. I am bullish going into the rest of the week. The only thing that would make me bearish is if this fair value gap gets ran through. That's the only thing that's going to make me bearish, is if this 4-hour fair value gap gets ran through to the downside, then I'll be bearish, and I think that we'll probably go back to these lows. But if I'm looking to see us come down, sweep this sell side level, bounce off this 4-hour fair value gap, and then pump. That's what I'm looking for. Any questions? No, this was a earnings candle. Some earnings came out. Does that matter? Yes, it does. I mean, no, it doesn't matter. Sorry. It doesn't matter if we had a move from earning. It still did what it needed to do, which was take out these highs. Looking to see if the bullish fair value gap holds? No, not at all. If this holds, there's no. I'm still not taking it long, right? Again, pick and choose. Does this look a good setup? What is the probability of me taking a long if this holds? To go all the way back here. A lot lower probability. There's not enough structure here. Why? Because we just rejected off of daily. So I don't care if we hold this little imbalance here. I still need some form of sell side to give me a good external draw. So I don't care if we hold this. I'm still not taking it long. I need more structure. Unless it's like an internal model, which is like I'm on a 1 minute and I see a lot of consolidation and then I'm looking for like a little scalp. I'll take scalps, sure. But I'm not looking to like use that as a bias. I'm not looking to use that as a bias is what I mean by that. All right. Let's take a look at DXY as well. DXY has kind of been leading us here as well. Again, exactly what we wanted to see on DXY. We're still holding bigger time frame. We actually ended up coming down, sweeping this internal sell side level where you had a really nice candle move to the upside. Look how bullish we've been on DXY. I'm expecting to see another breakout to the upside, which could actually possibly see more downside on ES and NQ, which I didn't really realize actually. And let me take the weekly here. Are we? Yeah. So we're in a weekly imbalance here that we just bounced off of. Now we're back inside this huge imbalance here. And I mean, looking at DXY, we absolutely could kind of go either way here, which is why I'm not going to focus too much on the bigger time frame, but more is focus on here. Looking at the daily, we've come down, we've swept this buy or sell side level on the daily. Big displacement to the upside. We've ran this imbalance. If this holds, we should see higher, which means we should see lower on NQ. So depending on what happens going into tomorrow, again, this to me looks like starting to form low resistance liquidity run to eventually have a move to higher. But I'm watching to see this. So going into tomorrow, I do expect to see a pullback into this area. Don't really know how far we're going, but at least some sort of pullback, which means higher on NQ. Which possibly means we could see some sort of Judah swing, which means a move to the upside and then possibly another continuation or rejection of that daily fair value gap to then go lower on NQ. So keep that in mind as well. Do you always wait for a stop raid? My best setups and my highest accurate setups and the best risk is after we have some sort of stop raid, yes. How do you determine what a stop raid is going to happen? You wait and you watch it happen, and then you look for the reaction. You don't know a stop raid is going to happen until it happens. But again, the more that you watch, just like with SMTs, the more that I predict SMTs, I know when the market is going to create an SMT. I know before the SMT is created, I know it's most likely going to form an SMT, and the reason is because it's just screen time. That it's just the same thing. Screen time, stop raids, all of those kind of things that just are kind of like a guessing. That's why I say wait for it to happen. I don't try to predict that it's going to happen. A lot of times it's just experience where I'll be like, all right, we're probably going to form SMT here and then dump, or we're probably going to form SMT that pump. Or, we should sweep these lows and then pump, or we should, sweep these highs and then dump, whatever it is. All that's just market experience and just experience just watching the market and seeing it happen over and over again. Do you wait for any second fair value gap for the trades? Because isn't that something you said, or based on the lows you pulled the trigger, I must have missed it. Yeah, when I say that I wait for the second fair value gap, all I mean by that is I wait for extra displacement, is I wait for the second opportunity, because the second opportunity is more probable than the first. What's the reason behind SMT? What do you mean? It's a divergence between ES and NQ. Halfway through 2022 ICT mentorship, so all this is starting to become a lot clearer than when I joined 3 weeks ago. Thank you much for everything. Much love, Mike. Glad it's starting to click. It'll trust me, brother. It'll click even more. All the people that have been in this community can attest to how much they probably have grown as a trader just from being in this community for like a month. And the people who've been in here for even longer can say that they're completely different traders. All right, I'm going to take a look at some other things as well. Let's take a look at gold here. Again, gold still having kind of manipulative action. This looks really bullish on gold, actually. Really bullish on gold. I'm expecting this to hold, and I'm expecting us to pump here. Low resistance liquidity run starting to play out. We should see a straight-up move here on gold, at least to this high. This looks really good on gold, actually. Really good. We tap that inverse, too. Yeah, gold should go straight to this high. It's kind of what I'm expecting to see on gold. Been here since June, completely changed the game for the better. Much love, Uno. Did you say that on NQ you are bullish, thinking we may react upwards from this 1 hour fair value gap we are in? I missed that part. I said I'm bullish on a bigger time frame, but I still want to see what happens in the overnight session just to see what happens. I'm on your morning calls twice a week, and the other 3 I trade by myself, and I do it so I don't become dependent on you. Do you think this is a smart, or should I show up every day? No, that's smart. Again, I want you guys to become dependent. That's when you're going to start to grow, is when you don't have, somebody in your ear. But I think it's just as important to be able to trade with me, because I've noticed a lot of the times, a lot of the benefit that I see people say from being with me is I keep them in check. And a lot of the times you guys need that, because especially when you're starting out, when you don't have the patience, you don't have the discipline, you need me to sit there with you and say, hey guys, there's nothing here. Like, you should not be looking to trade this. Like, there is nothing here. Because a lot of you guys don't understand what's good probability, what's not probability, and that just takes experience. So a lot of the times I just keep you guys patient, keep you guys disciplined, and make sure you know when a good time to take a trade and when it's not a good time to take a trade. Have watched your drawn liquidity video probably 10 times, and it's a game changer, bro. Really appreciate it. Much love, brother. What videos do you recommend to watch not new to ICT? Oh, if you're not new to ICT, okay. And all the videos on my page. a lot of the, go back and watch the charting sessions. Go watch. There's some really good people on Twitter that are really good, but I would say, again, just from me, and I think that my content, like, not even on some like ego shit, I think my content is very educational, and it's very easy to understand. How do you trade higher time frames trades differently than lower time frames? What are the differences? Using the bigger time frame model to then zoom in and find internal models. So if I have like the exact, like for example, if I'm looking to take a long right here, right, on NQ, but this is a 15-minute time frame, where would I look to take an entry? Okay, well, I zoom in here and I say, okay, well, there's a possibility we could come down here to sweep this one more time. So the only really way that I would look to see is if we come down to this 15-minute fair value gap. If we then hold this and we get displacement to the upside, then I'll take a long. So then I zoom into the 5-minute or the 1-minute, whatever I'm looking at. I'll zoom into the 5-minute. I'm looking to see a price come back down to this area. If I then get an internal model from here, meaning come down, we hold this, price shows me we want to hold this, then we get displacement, then I take a long. And then I target that internal high, then I target that second high, and then I target that external high. But I need to see all of that happen first. But that's just how I trade bigger time frames, is I wait for the internal trade. I don't take like a long here and then put my stop like all the way down here. Like I won't take this long and then put my stop all the way down here, you know, do that. Like I don't want to do that. I don't want to sit there. I want to, again, I want precise entries. And you get precise entries when you zoom in. It's all about a balance. It's the balance between using external draw versus trading internal models. Again, it's all fractal. Setups during London, Asia, would you take it? What's your take? No, I don't trade anything other than New York anymore. I only trade New York session. Different sessions. It's ICT kill zones and pivots. The indicator, that's what it's called. Why don't you trade London? Because I'm in bed. Why'd you decide to take rejection off 5-minute versus waiting for second fair value gap on PM trade? Because again, a bigger time frame model. That's what I was explaining earlier. Is the difference between me just entering off of imbalance versus me waiting for rejection has to do with whatever time frame the model is. Because the entry that I take on a 15-second fair value gap, I'm just entering that shit. If I'm taking it off of a 15-minute or a 5-minute, I wait for the rejection of that imbalance and then I look for a smaller time frame fair value gap. London high or low for New York session? Yeah, of course. Yeah, absolutely. Lower time frame, you just enter fair value gap with displacement when you have confidence in the draw? Yes. Yeah. How useful has backtesting been? I'm going to be honest. I don't think backtesting is... You shouldn't waste a shit ton of time backtesting. The only really reason that I would say backtesting is really useful is if you're testing a specific model that you have an idea with. Meaning, you see something in the market, let's say like, hey, you know, I normally wake up for London and I notice that like when we open, you know, above the recent high, that we normally instantly sell off. I'm going to go back in the chart and see how many times this happens. That is when I think backtesting is good, is when you want to test something that you're thinking of. Other than that, I think the only really thing you're going to gain confidence with is just through market experience and actually watching it happen live. Because there's added emotion. There's no added emotion when you're just watching a replay. You need to see something happen live because you have no clue what's going to happen next. So if you wanted to test a model, seeing as it's never used live before, backtesting would still make sense. Yes. Backtesting is good if you have a model that you want to test. Again, test it live and backtest. What are your future plans after trading? Invest and just become an investor pretty much. I have some other companies I'm working on right now. Some other projects. Just create. I just love creating things. Create a bunch of companies, fund money for people to build stuff, do what they want to do. Real estate, all that jazz. Just pretty much just don't work for anybody else. That's my goal. What year were you born? I was born in 2003. Swing trading? No, more of like, I mean, yeah, yes, swing trading, but more of like in businesses and in real estate and stuff like that, like assets. I mean, I guess invest in stocks as assets, but my birthday is September 20th. All right, guys, that is pretty much all I have for you guys tonight. Actually, let me take a look at this trade. Got stopped. Can you review? Took a gold. Again, that's why I don't trade gold. Again, gold will tease liquidity. Gold will tease liquidity. I think the stop here is way too tight for gold. Way too tight. If you just enter off this imbalance and you put a stop on, yeah, way too tight here. Way too tight. Guys, I'm going to be honest. Just trade NQ and ES, guys. Like, if you want to see you become more profitable and more consistent, just trade NQ and ES. Like, I'm telling you. I'm telling you. All right, guys. Enjoy the rest of your night. Get some rest. I will see you all tomorrow morning. If you have any further questions, again, always feel free to just put them in the Discord at me, and I'll make sure to help you guys, or somebody else in the Discord will. So enjoy the rest of your night, guys. I will see you all tomorrow morning. Let's keep it up. Let's keep winning. Let's have a good rest of the week. See ya.